Good afternoon, cocksuckers. How we doing? How we doing? We're gonna make this a quickie because quickies are the best, and it's pretty dead. This market, once again, just constantly baffling people, despite the what was it? Employment or whatever. I really don't care at this point. But couple notable things that were reported today that evidently had no real significance to them because the SPY traded sideways within a range of about 1% just all day. Again, I don't like this. This was today. This was today. Hold on, let me fit this better. This was all of today, right? Everything, there was a range there before that showed something that actually deviated beyond 1%. That was pre-market. So, but all in all, this was it. This was it. So if you, I don't even want to say if you're good at trading, if you held a position that wasn't short, congratulations, you've been victim of theta gang. Hopefully you didn't buy calls or puts because theta was on everybody today. Macro-wise though, not really looking good. Not one, not two, but 3 rejections off of the lowest accumulation band on the 4-hour. So that is really not looking good. Especially just the bodies of these candles and where they're happening per each rejection. Let me go to hollow candles actually. There we go. And the reason I say that is because there's a lot of psychology going. Fuck off, Malwarebytes. There's a lot of psychology going on here that I think people really overlook when it comes to looking at candles. Because again, candles are a pretty like simple thing that people only care about when it affects their P&L. But there's more to it, especially on macro timeframes. So because this is the daily, and this is going to sound really simple and really elementary, but I think a lot of people overlook it. So because this is the daily, each one of these candles represents a whole session of trading, yeah? Okay, well, just by candles alone, and again, it's just as stupid as this sounds, look at the ranges of the wicks and the bodies. There was a high up here and a low down here, right? That's a lot of range. In fact, that is about, that is about 2%, right, in one day, going up 2%, down 2%. In total, it traversed 4% worth of movement. And ended up closing somewhere in the middle, right? And that looks about to be about 1%. Yeah, 0.9%. That was the first rejection. The second rejection, the range is compressed, turned into 1.4%, so 1.5, we'll call it just for easy numbers. The body closed higher, right? This was our high, this is our low, but still rejected, but we did, in fact, have a lot of range above us in terms of the low, right? So we closed at about 1% higher, okay? Just follow me here. We closed 1% higher than the low. Now, because this is a macro time frame, generically speaking, when we can capture that insight to a candle and then use that lens across 3 other candles that had similar rejections, we can start to paint a picture here of, okay, lots of range, buyers and sellers going at it, close somewhere in the middle. The next rejection, still a lot of range, but about 3/4 of the initial rejection, right? Closed higher, right? So buyers, you could say, had won this particular skirmish, but then rejected again, and we are at the fucking low. I'm gonna clean up these drawings real quick. But we're at the low of that range. I'm gonna give everybody a second to consider why that's important. So the net movement here, about 1%. So about half of the previous candle, which had 1.5%, which was about 3/4 of the candle before that, that being the first rejection at 2%. So the volatility, the ranges, not volatility, but ranges, have shrunk considerably, right? They've compressed. And instead of closing in the middle, and instead of closing towards the top, we're now at the bottom, right? This doesn't look good, and I think there's a term for this, like an inverted hammer candle or some shit. Yeah. This is known as an inverted hammer candle. A lot of people like to say this is a reversal. I don't agree. I really don't agree. Um, here's the problem, right? Here's the problem. Is a lot of people can come up with a head and shoulders pattern, and it's typically bearish, right? A lot of people can come up with descending wedges, which are typically bullish. There are still instances where there are the opposite of sentiment that happen, despite a particular pattern being a particular sentiment. And on top of that, you see a double bottom at this range of 360, which is God. 360, double bottom, this and that. Everyone's going to be bullish about this, and I'm going to tell you, no. No. Um, we closed down 1/3%. We're up 1/10% in after hours. Just you need to consider for a second where all the selling is taking place range-wise and where all the buying is taking place. Buyers are only really stepping in along here, right? And even this is pretty generous of a range. This goes all the way back to September, so this is about a month of trading, right? About a month of trading. And just consider the context of everything that's been going on for the past 6 months, even 3 months. There's always a new fucking character or event that enters into the scene. This is a very ripe season for really shitty headlines. So everything above here is selling, and you're only seeing buying down here. But then you zoom the fuck out, and look where we're at. This is not an ideal place to be. Everything considered, this is not an ideal place to be. I really don't think that for as much as people want to get excited about a double bottom and this and that and power bottom, if that's your thing, like this is not, I don't know. I'm not here to tell you what to do. I'm just here to tell you what I think. On the daily, I'm sorry, that was actually all the 4 hour. That was the 4 hour chart. So each one of those candles was a 4 half-hour session, half of a day session. So you're gonna do what you're gonna do, and I'm just some fucking schmuck who's telling you his thoughts. But this does not fucking look good, people. The volume, okay, this indicator up here, I don't know, I think this is released, but this shows you buying versus selling with some other proprietary things that I've added. You can see that selling continues to overtake buyers, and buyers are stepping the fuck out. So I don't really like this. It's not looking good. Pretty much any time that you do see some strength coming in from bulls, it just gets slapped the fuck down by either short sellers or people or other people who are cashing in on the those ranges because they bought lower at some point. All right, so all in all, just continuing to be rejected. Looking at the weekly of everything, this is well below the weekly. If you've been following along on the quasi daily updates, you'll know that we've been watching the weekly triggers. Just it was originally being a very significant support. I'm going to pull up futures to better illustrate this. Where? There it is. This was a strong support. These two were a strong support. These actually used to be to the penny in terms of matches, but then I reworked the engine for calculating Wyckoff levels. So maybe that was a bug, maybe that was a feature, I don't know. But you can tell that these were very significant regions for bounces to occur, and now we are well below that. And not only that, but we have been rejected off of the weekly, not once, but twice. So this is not looking good. And again, this is the weekly. And again, this looks like a fucking catastrophe is about to fucking happen. I don't think it will be a crash, but it will be a very, very, very bloody controlled sell-off. So go about it as you will. And just to also harp on one more point that was made probably a week ago, 2 weeks ago, this is an expanding pattern, as in you have like, think of like a wedge flipped inside out, right? Instead of converging to a particular point, we are diverging. We are seeing lower highs and lower lows, which means that as you continue to traverse this pattern, wherever the fuck I put my fucking, god damn it, maybe this is it. Whatever, this will do for now. But you basically continue to echo in and out of lows and highs, and because this is expanding, you will see much lower lows and much longer lows, and higher highs relative to like a micro time frame. But all in all, those highs are continuing to diminish, right? So that's my fucking 10-minute plus speech about how basic geometry and whatnot works. Not to condescend, but I am actually just taking shots at myself for talking about something that is so simple that my stupid brain can't articulate it fast enough. Anywho, all right, so yeah, not looking good. Not looking very good. Tesla? Oh yeah, yeah. For anyone that does watch these, you might recall that we called out Tesla as being a stock that is probably not going to perform very well within the near-term future. That video was made, I think, 2 weeks ago. And the thesis behind that was that Tesla is technically a tech stock. It behaves a lot like a tech stock, and it hadn't gotten gutted yet, like Meta, Amazon, Apple, Google. And so our theory was that Tesla was next, and sure as fuck it was. Down 33% since that video. Here's the daily. I was just on the weekly. Here's the daily. And we also caught it falling out of distribution. That was also a part of the thesis. And sure as fuck it did. Now writing below accumulation, with a longer term accumulation band starting to catch up to it, but that is going to take a while. And if we just kind of extrapolate here, given the current trend, we would see a bounce take place around October 26th, so about 2 weeks if we're assuming that the current trend continues to go down. If not, then this trajectory would extend, and that would be, if we take like a median here, December 2nd is when you would start to see some form of rebound. Kind of looks like midterms are going to do the thing where the market gets pumped up, and then each political party takes some form of responsibility for it doing well, and then it gets dumped. So yeah, not really looking too good. Basically, just a continuous sell-off. Yeah, Amazon. Pretty much same thing. This closed down. No, this closed green at just above 0.5%. I'm assuming because of how bloody yesterday was. Not really looking too good. Maybe might get a little bit of a redistribution here up to like 115. So like 2%. Not looking good though. Nothing looks fucking good. QQQ. You might actually see a rally here just because of how aggressively it's been sold off. But again, not looking very good. Yeah, no, everything looks like shit. AMC closed down 4.5 fucking %. God bless all of you. This actually does look good. This does look like a deep-rooted spring. Jimbo closed green at 0.36%. Malwarebytes, I'm gonna slap the fuck out of you after this video. Again, continuing to bounce off the daily numerous fucking times. Damn, it's almost like someone made an indicator just for this stock and a handful of others. Bounced 3 fucking times. The ranges are diminishing pretty quickly, unfortunately, so I don't know how much longer this bullishness is going to last. Yeah, I don't know. Now here's the weekly, giving some callback to what the first 10 fucking minutes of this video was about, where Here we have the weekly candle, and if we look at the wicks and the bodies of it, we can see that the ranges are diminishing, and the closes are actually kind of holding, but I think it's going to get slapped, unfortunately. Yeah, so I'm going to leave it there. Appreciate you fuckers. Someone remind me, by the way, to put a counter somewhere on the video for how many days in a row we can make it doing a daily market update. Yeah, about it. Stay black.